Ever wondered what separates the wealthy from the average? It's their knack for smart financial investments. Now, you might be wondering, what exactly are financial investments? Simply put, they're the vehicles that propel your money to work harder for you. Rather than letting your hard-earned cash sit idle in a bank account, financial investments allow you to grow that money exponentially. You're essentially buying future income. Think of it like planting a seed. Sure, you could eat that seed now and it might satiate your hunger for a moment, but if you plant it and nurture it, it can grow into a tree that bears fruit year after year. That's the power of financial investments. They are the seeds that can grow into wealth-generating trees. But why are they so important? Well, the answer is quite straightforward. Financial investments are the lifeblood of long-term wealth creation. They're the key to not just surviving but thriving in an ever-changing economic landscape. Without them, you're essentially leaving your financial future up to chance, and that's a risk that's too big to take. However, the world of financial investments isn't a one-size-fits-all arena. There's a myriad of investment options out there, each with its own set of potential returns and risks. Some are as volatile as riding a roller coaster, while others provide a steady, albeit slower, climb towards financial growth. But here's the exciting part: the potential returns they can yield are nothing short of incredible. We're not just talking about doubling or tripling your money. With the right investment strategy, you could see your wealth grow tenfold, even 100-fold in some cases. So the question isn't whether to invest or not, it's about where to invest. And that's exactly what we're going to explore next. So buckle up, because we're about to dive into the top 5 financial investments in 2024. First on our list is an age-old favorite, the stock market. The stock market is a dynamic, fast-paced world where shares of publicly traded companies are bought and sold. It's a marketplace that allows you to own a tiny slice of a huge corporation and potentially share in their profits. This arena of investment is not for the faint-hearted. It's like a roller coaster ride with thrilling highs and nail-biting lows. One moment, you could be on cloud 9 as your chosen stock's value skyrockets, and the next moment, you might be picking up the pieces of a sudden crash. But what makes the stock market so appealing? The answer lies in its potential for high returns. With the right strategy, informed decisions, and a little bit of luck, you could see your investment grow exponentially. Just think about those who took a risk and invested in companies like Apple or Amazon in their early days. However, it's crucial to remember that the stock market is not a get-rich-quick scheme. It demands patience, diligence, and a deep understanding of market trends and company fundamentals. Investing in the stock market without doing your homework is like diving into an ocean full of sharks without a safety net. Despite its volatility, the stock market continues to be a lucrative investment avenue for many. It's a game of risk and reward, and for those who play it well, the rewards can indeed be bountiful. Moving on, we have another classic: real estate. Now, when we talk about real estate, we're not just talking about buying a house to live in. We're talking about purchasing property as an investment, with the intention of earning a return on that investment through rental income or the future resale of the property, or both. What makes real estate such a compelling investment? The answer lies in 2 key benefits. The first is steady cash flow. When you own rental property, you're earning money each month in the form of rent payments from your tenants. This can provide a reliable and steady source of income that's often more predictable than other forms of investment. The second major benefit is property appreciation. Over time, the value of real estate tends to go up. This means that the property you buy today could be worth significantly more in the future. This potential for growth can make real estate a powerful tool for building wealth, but it's not all sunshine and rainbows. Investing in real estate requires due diligence. You need to understand the market conditions, know the location, and be ready for the responsibilities that come with property ownership. It's not a passive investment, but an active one that demands time and effort. Real estate, when done right, can be a stable and profitable investment. Next up, we have the modern-age investment: cryptocurrencies. Now, imagine a world where every transaction is digital, decentralized, and secure. That's the vision of cryptocurrencies. Born out of a revolutionary technology called blockchain, cryptocurrencies have seen a meteoric rise over the past decade. From Bitcoin to Ethereum, these digital assets have challenged the traditional financial landscape, offering a new avenue for wealth generation. However, with great potential comes great volatility. Cryptocurrencies are notorious for their price swings. One moment, you might be on top of the world. The next, you could be scrambling to cut losses. That's the thrilling yet daunting world of digital currencies. But let's not forget, the potential for high returns is immense. Think about it. Bitcoin, the first and most famous cryptocurrency, was worth less than $1 when it was launched in 2009. Today, it's worth thousands. And it's not just Bitcoin, numerous other cryptocurrencies have followed suit, multiplying their value several times over. Yet it's critical to underline the risks involved. Cryptocurrencies are still a relatively new phenomenon, subject to regulatory uncertainties and potential security risks. Hence, thorough research and due diligence are paramount before diving into this investment pool. In summary, cryptocurrencies are a high-risk, high-reward investment. They offer a potential for significant gains but also carry a risk of substantial losses. So, tread carefully, but don't be afraid to explore this exciting new frontier of finance. Cryptocurrencies are risky, yet they present an exciting opportunity for enormous growth. Fourth on our list is the community-based investment peer-to-peer lending. This is a method of debt financing that enables individuals to borrow and lend money without the use of an official financial institution as an intermediary. The lack of middleman in the process often results in more favorable terms for both parties. The beauty of peer-to-peer lending lies in its simplicity. It's all about people helping people. Borrowers seek funds for various reasons. It could be for starting a small business, paying off credit cards, or even funding a home renovation. And lenders, like you, provide the necessary capital while earning interest on the repayment. Potential for high returns? Absolutely. Interest rates in peer-to-peer lending often outpace those of traditional savings accounts. But remember, with great rewards come great risks. The primary risk being the possibility of borrower default. Unlike traditional banks, these platforms usually don't offer the same level of protection for your investment. So, how do you mitigate these risks? Diversification is key. Spread your investment across multiple loans to reduce the impact of a single default. You're not putting all your eggs in one basket, so to speak. Peer-to-peer lending is a unique blend of community spirit and financial investment. It's about making a difference while making a profit. Remember though, it's not for everyone. It requires a certain level of risk tolerance. Peer-to-peer lending can be a rewarding investment if you're willing to shoulder some risk. Last, but certainly not least, we have ETFs and mutual funds. Exchange-traded funds, or ETFs, and mutual funds are both types of investment funds, but they operate a bit differently. While ETFs can be traded like individual stocks, mutual funds shares are purchased at the day-end net asset value. Each of these investment options has unique benefits. One of the critical advantages is diversification. Picture this. Instead of putting all your eggs in one basket, you spread them out across different baskets. This reduces your risk because your investment isn't tied to the performance of a single company. Another significant benefit is professional management. When you invest in these funds, experienced professionals manage your money, making investment decisions on your behalf. This expertise often leads to better returns over the long run. ETFs and mutual funds offer a relatively safer investment avenue, ideal for those seeking steady growth. So there you have it, the top 5 financial investments in 2024. We've delved into the stock market, showcasing its dynamic nature and limitless opportunities. We've explored the solid ground of real estate, a timeless asset with tangible rewards. We've navigated the complex and exciting world of cryptocurrencies, a realm where digital meets wealth. We've looked into peer-to-peer lending, a modern, community-centric investment avenue. Lastly, we've walked through ETFs and mutual funds, the diverse and customizable investment portfolios. All these investment avenues have their unique advantages and challenges. The key is to do your homework, research extensively, understand the market trends, and manage your risks wisely. No matter which investment path you choose, remember that it's not about quick gains. It's about making informed decisions and being patient. Remember, the best investment is the one that aligns with your financial goals and risk tolerance. Invest smartly, grow exponentially.